So robust statistics is the next greatest invention after compound interest. But why is it exactly? Because nobody ever talks about them when it comes to trading. Let's look at what Google tells us. Robust statistics are any statistics that yield good performance when data is drawn from a wide range of probability distributions that are largely unaffected by outliers. In other words, a robust statistic is resistant to errors in the results, or I would actually say it's resistant to outliers. That being said, robust statistics are used all over the place for a wide range of reasons. And yet, for some reason, they are not used in trading. I barely can find any information about them online. Regardless, knowing just how powerful robust statistics actually are, I had to figure out a way of how to use them to evaluate strategies and overall fund performance in the automation software that I've built. You will learn all about that in future videos. So I read and researched and coded, and I figured out the formulas and ways to use them to make our trading better. Now, I will be making a video for each robust statistical measurement unit that I managed to figure out, but this video is not about that. In this video, I want to introduce you into the use cases of robust statistics in trading and show you a few simple examples of how they actually work. So first of all, the main use case for robust statistics will be evaluation of trading performance, not finding entry signals or risk management or whatever like that. Although we could probably use it for risk management. Maybe I'll figure out a way how to do that. Alright, so evaluation of trading performance. Now, as a trader, you must always aim to eliminate the human factor from your trading as much as possible. You must aim to make your trading as structured and as robotic as possible. That's why everyone always tells you, have a plan. They're right about that. If you just keep on trading on hunches, it's no better than gambling, really. Now, a little detour. I'm not saying that successful discretional trading does not exist. I know a lot of people who do that and they do it very successfully. You do develop a feel for the market over long years of experience, and then your hunch almost becomes like a trading signal in itself. Just because in the back of your head you have seen the scenario numerous times. And yet, this channel is not about that. This channel is about making your trading a science-based money-making machine. Okay, so back to the topic at hand. We will be using these robust statistics to evaluate the trading performance of a strategy or a money manager. So for this, you will need to have some trading history. Clearly, the more the better, and it doesn't really matter if you were trading on hunches or you had a trading plan set in stone. You will be taking your trading history and running some formulas on that history, most likely in Excel, and getting these units. Now, best case, of course, is actually if you have a back test of a strategy you want to test. That will give you a lot of results that you can measure robustly. Now, what running these robust formulas on your results is going to do is actually it's going to give you the insight whether your trading is actually going somewhere or not at all. You will see what are the actual expected trading results if you continue doing what you're doing. And while it may seem that you are actually making money now just by looking at the plain growth rate, for example, a robust unit might show you that it's not actually true, just because you got a few lucky trades right. Okay, so now that we know why we will be using them and what we need in order to calculate them, let's look at a few examples of how these robust units actually differ from non-robust counterparts. Let's take the simplest one, for example, a non-robust growth rate and a robust growth rate. Now, just because I'm not going into the nitty-gritty of this in this video, I will simply draw a few hypothetical P&L curves on the screen just to deliver the actual idea of what robust statistics are. But in future videos, once I actually start going into the formulas of each unit, I will be taking real examples and showing you actual numbers for each statistical unit. So make sure to subscribe if you don't want to miss that. So here on screen, we see a hypothetical P&L curve of a hypothetical trading performance. Now, clearly you can see that the trader did well here. I mean, just look at the P&L spike at the end. So a growth rate for this curve will actually be a very good one because it's going to take the starting and ending points of this curve and see how much the account size has grown. Now, what the same robust unit would actually do is it would take the mean of all the values in the P&L chart, draw the line of that mean, and get the slope value of that line. And this slope value then represents the robust growth rate. Now, see how these two values and these two slopes differ. If you simply look at the non-robust growth rate, you may think, wow, this is a great strategy, I should continue with it. While a robust unit says, no way, man, that lucky trade here is an outlier. We don't give it that much weight you think it's worth. And your actual anticipated performance is this. Now, seeing this robust value, you may think, ooh, maybe I should change something here. Now let's look at how sensitive the non-robust statistical values are in comparison to the robust ones. Imagine that in the next few months the P&L curve changed in the following manner. The huge spike is almost gone and the growth rate took a drastical hit. Now look at the same robust value, it barely changed. And that's the beauty of robust statistics. They don't give a shit about your lucky outliers. They see through the bullcrap and call it how it is. And that's why I love them so much when it comes to evaluating trading results. Okay traders, I'm really happy you actually stuck till the end. I do hope this shows you the power of robust statistical units in a simple to understand way. Now be on the lookout for future videos about robust statistical measurements where I will actually be taking each and individual value and going into the formula and explaining it very well. Now if you want to eliminate all the guesswork from your trading and join a community of people that actually trade scientifically, go ahead and subscribe to the channel. We are trying to bring the science back in trading here. Alright, it's time to end this video. Thank you so much for watching and I hope to see you in the future videos. Bye!